Hey, it's Chris. Recently, you might be seeing articles of private equity being available for your 401k plan soon. And so I thought I'd make a video to discuss the facts about it, the likelihood of this, and some other insights. So stay tuned. Let's run some disclosures. I'll be right back. So here's the agenda. I'm going to stay on track to some talking points. So the agenda, talking points. Private equity in your 401k plan. Well, first, what is private equity? What are the pros and cons? I have some additional insight. And then there's some practicality and functionality with this that we're going to have to figure out. We're going to have to be figured out. So first, what I'd like to do is kind of share what I've been up to. Let's do this. Let's just put into Google here, what is private equity? So private equity refers to capital investments made in companies that are not publicly traded. That's pretty much as easy as it is. If you know a large company out there that you have stock in or is inside your mutual fund, that's a publicly traded company. Privately traded companies are, they'll have stock, right? But it's not publicly traded. It's not on a stock exchange. Now, quick side note, there are websites or businesses now coming up with ways to help you trade stock of privately held companies. It's not as widely adapted as stock in publicly traded companies, the NASDAQ Stock Exchange, the New York Stock Exchange, that kind of thing. But there are great companies out there that are privately held that you and I just really can't easily buy. So they're coming up with ways to do this. It's going to be through funds. And now to raise money for that, of course, the fund managers want more management fees and all that. So they're going to make these conveniently available in your 401k plan. So that's what private equity is. But let's talk about this. So now let's go to ChatGPT. And I say create an outline for the pros and cons of private equity and 401k plans. And it got it. I think it did a very good job in outlining this for us. I guess what I didn't know is the U.S. Department of Labor guidance in 2020 allowed certain private equity options in professionally managed 401k plans. So I guess after 5 years, they finally figured out a way to turn this to their advantage. So potential advantages, diversification benefits, right? So more diversification. It suggests that private equity has higher return potential, right? Potential for higher returns, but I have a talking point on that. Professional management. Access through target date or balanced funds with institutional oversight. Let me come back to that. Investment decisions made by experienced fund managers and access to exclusivity allows average retirement savers to tap into an asset class traditionally reserved for institutions and high net worth investors. So this is generally true, right? Higher return potential, right? Potential, but let me just table that one again for another moment. Professional management, access through target date or balanced funds with institutional oversight. So what this is suggesting, and I heard this point in a podcast. It's not like you'll have the large cap fund, the mid cap fund, or one way of implementing this is you'll have your large cap fund in the 401k, your small cap, your bond fund, your international fund, and then there's going to be a private equity fund. That's one way of doing it. The second way is you'll have the asset allocation fund or the target date where you're going to retire in 2030, 2035, 2040, 2050, whatever your retirement year is. You buy those funds, they're called target date funds. They'll make it a sleeve into there, 5, 10, 15, 20% of the allocation. So you have stocks, bonds, and private equities in there. That was floated as the most practical way to do this. And I'll talk about that again in a moment here with some additional, when I get to my additional information. But that seems to be the way touted that this will occur. It'll be through target date funds versus its own private equity fund in your 401k. And access to exclusivity, right? So the big cry here from somebody, raise your hand if you've ever had an employee come in and say, hey, I'd like a private equity fund in my 401k. Or if you as an employee went into your employer, hey, should we get private equity funds in here? Maybe it's happened, but I don't think at a terribly large level yet. So, these private equity funds are generally for accredited investors, people meeting certain criteria with large dollar commitments, sometimes as low as $100,000, but sometimes the minimum's $1 million. So it opens up for smaller deposits. Put 1,000 a month into your 401k, 2,000 a month. You can buy in right away with this versus having to wait till you have larger amounts. Now, potential drawbacks. This is true. Liquidity constraints. If you own a publicly traded stock, you can buy it and sell it any day the stock market's open. Probably no problem, right? Liquidity constraints with private equity. If you own, I just pick like let's say, what are we going to make? A technology, just say it's a technology private equity company, or say it's a healthcare company trying to find a cure for cancer. Let's focus on healthcare because technology is probably overdone. So there's a healthcare company focused on a cancer drug, and it's in your private equity. It's in your private equity fund. You say, hey, look, I need $10,000 out of this fund. Well, there's this healthcare company in the fund, and well, there's a technology company too. I should go on about this. Technology company, food company, a retail company, a new startup for clothing, an online clothing vendor. They're all privately held companies, but you want to sell your shares, but there's no one to buy your shares, right? You want to sell 10 shares of the healthcare company for $10,000 total, but there's no buyer for that right now. So that's what they mean by liquidity. There's not always a buyer for the sellers of the shares. And so you may not be able to get your money back on demand, as with traditional mutual funds. Now, that's a problem. You need a loan, that's a problem. You have an emergency withdrawal, that's a problem. You want to retire and do a 401k rollover and move the monies into your IRA. That could be a problem. You may have to leave some monies behind. Now, I don't know how much. I don't know if they're going to break out. If you have $100,000 of a target date fund with $10,000 in the private equity fund, are you going to be able to get out $90,000, leave 10 on the table? I don't know. I guess I'm kind of getting into that. I'm getting into that practicality here, practicality, functionality. I guess I'm going to have to interweave that in the presentation here. Maybe true that up at the end, but the practicality of some of these things. Let's keep going here. Higher fees. Management and performance fees often significantly higher than mutual funds or ETFs. Fees can eat into returns, especially in underperforming funds. Okay, there's always you got to throw a dart at the fee. But higher management fees with private companies, yeah, there's a lot more work that goes into managing private companies than publicly traded companies. And so I think the fee is valid to some extent because there's more work and more effort going into it. But typically, if you're going to pay more, you want better returns, but there's no guarantee of better returns. There's a higher probability. What did it say up here? How to position it? Higher return potential. I agree with that, but I got some other charts that show it's not completely guaranteed. It's not a given, right? And there's a challenge with that. Valuation challenges. PE assets are not priced daily like public securities. PE being private equity. Right? They're not priced daily. That healthcare company I talked about raising money for cancer research or trying to find a cure for cancer, their share price is not evaluated on a stock exchange. It's evaluated once a year by some auditing company, maybe their accounting firm, probably using GAAP accounting, the industry standard, but it's not valued every day. And so if the valuation in January was $1,000 a share and it's October, well, is it up to $1,200 a share or is it down to $750 a share? There's been no valuation for October, 10 months. For 10 months, you don't know. There hasn't been a price change because it's only valued once a year. So where the stock market is millisecond by millisecond, the price of stocks change. Even if it's only by a penny, the price can change. So valuation changes are a problem. Higher risk and volatility. The cancer company may not find a cure for cancer and they're going to go out of business. Okay, that's the higher risk. Well, all businesses have risk, but it's heightened with private companies and complexity. Harder for average investors to understand, right? I mean, these mutual funds, some of them are tough enough to understand, although I suggest people keep it simple, which we do here in the practice, and it may increase the risk of poor decision making without adequate education. So these are concerns for this. Summary, what did I do here? Balanced perspective. Private equity can enhance returns and diversification, but brings significant costs, complexity, and liquidity risks. Suitability depends on plan structure, participant demographics, and fiduciary oversight. So Uh, I guess I got to touch on this practicality thing. I can't. I mean, practicality and functionality. I mean, you see the practical problem here is how do you put it into your plan? Do you put it as one particular fund, or do you put it as a component of a target date fund? And even a target date fund, just because it's a mutual fund that's buying a mutual fund, doesn't mean it has any better liquidity than you or I do. Now, it may have some benefits because it cash flows into the overall target date fund, but liquidity of the private equity is a problem, valuation of it is a problem, understanding of it is a problem. And that's where I have to cut this off. I ran into some compliance issues because I got a little bit too detailed in the original remainder of this. So we'll cut that off here, and that's the discussion of private equity being available in your 401k plan. For now, perhaps we can come back to this later. But thanks for watching.